Hey guys, Alex here from MarketWise Asia, and in today's video, just a very quick one to share with you something called the market breadth to check with you the overall market health of the stock market right now. And of course, the biggest news yesterday was the FOMC meeting. By now, you should know that the Fed, forecast that there will be at least 2 rate hikes by the end of 2023. All right, so this was the news yesterday, and the market didn't take the news very well, and there was a sell-off. Eventually, the market did recover a bit, but it is still negative at the end of the day. So before I get really started to talk about market breadth, just a very quick disclaimer first. All right, so whatever I share today is just for educational and informational purpose. It is not financial advice, so please do your own due diligence. All right, so let's get started. I'm going to use this site called the index indicator to share with you the market breadth. Basically, the market breadth is to check the overall health of the market, as I mentioned. And for those who don't know, market breadth actually refers to how many stocks they are actually participating in a given move in an index or a stock exchange. An index could be rising, but there could be more than half of the stocks in the index that are falling because a small number of stocks, they have such huge gains that they drag the whole index higher. For example, the S&P 500, the Apple, the Microsoft, they could be, heading higher, but the rest of the stocks could be heading lower because they have such a huge weightage on the S&P 500. All right. So let's go to this site called the indexindicators.com. So this is the site over here, and I'm going to use this thing called the number of stocks above the 50 days moving average. All right, I hope you guys can see over here. All right, percentage of S&P 500 stocks above the 50 days moving average. And this 50 days moving average is an indicator that a lot of investors or traders see on their chart. Typically, when price is above the 50-day MA, it is deemed as an uptrend and overall health that, the index or the stocks are still in a healthy uptrend. When price is below the 50 days moving average, there's some cause of concern that it is in a short to mid-term downtrend. All right. So basically, these are breadth indicator, right? So I used 2 years within the past 2 years, and I chart it, right? So this is the chart you're gonna see. All right. So the black line over here is the S&P 500, while the green line over here, is the market breadth. Treat the market breadth as kind of an overbought and oversold indicator. So as mentioned, right, this green line is the number of stocks above the 50 days moving average. Right now, at this moment in time, we are at about 17th of June 2021. The reading says about 55%. So 55% of the stocks right now in the S&P 500 are above the 50 days moving average. Okay, get it, huh? So about 55% of all the stocks in the S&P 500 are above the 50 days moving average. But what I want to let you see is that, typically when the market breadth is high, like for example, over here, over here, that kind, when it is at a high, market tend to do a correction. When it's at a high, market tends to do a correction. When it's at a high, market tends to do a correction over here. Vice versa, the reverse is true. When the market breadth is at a low over here, right, the market tends to rebound. When the market breadth is at a low, market tends to rebound. When the breadth is at a low, market tends to rebound. When the market breadth is at a low over here, market tends to rebound over here. All right, so right now we are still, in a way, it is at a middle ground. It's not really very high nor very low. But what I want you to take note is that, there's this thing called the divergence. I'm not sure whether you guys can see over here. All right, so you can see that the market is heading higher, but overall the market breadth is heading lower. Can you see over here? So which means there's a divergence. While the index S&P 500 is heading higher, the number of stocks that are above their 50 days moving average is going lower and lower. So what does this tell you? This tells you that the market internally could be a lot more weaker than you think it is, based on the S&P index that you always see in the news, whatever it is. So while they are going higher, quite a number of stocks, in fact 45% of them right now are below their 50 days moving average. So this could be a cause for concern. This tells me that the market is not very strong. So I'm not scaring you that, you know, there could be more sell-off or there could be more correction in time to come, but be prepared for it. Be prepared for it. So please, you know, don't be so gung-ho and have, you know, like 10, 20 positions in your brokerage account or doing short-term trading and having so many positions. All right, so please be careful on that. So I hope this gives you some perspective. So in case you can't see, let me try to zoom in over here. All right, while the market is heading higher overall, the S&P 500, you know, the market breadth that's above the 50-day moving average is heading lower and lower. So let's take a look at the chart right now over here. So this is the S&P 500 futures, S&P futures over here. This is the weekly time frame, and overall you can see that, you know, the market has been going up for many weeks already. Okay, so it has been going up for quite some time, but there isn't a, you know, a meaningful pullback as, you know, 5-10% that kind. Okay, so just a very shallow pullback over here and then continue to head higher. And if we zoom in right now, so this seems like a false breakout over here. And you'll see price actually did try to break above the previous swing high over here, but eventually price couldn't hit higher. And then yesterday, of course, this was the sell-off yesterday. All right, so overall the market has been weak. So I be prepared, the market could come down a bit lower over here to this over here. It could be. So if from here to 4,000 region, let me see, the drop could be about, you know, at least 5% down. So in my opinion, this is still a pretty shallow pullback. You know, the market could fall by 10 to 15%, but it is still on overall an uptrend. So be prepared for that. Okay, so just something to take note over here. I just do a very quick recap over here. While the market is heading higher, the S&P, the market breadth, the number of stocks that's above their 50 days moving average is coming down. So whether it is due for concern, all right, we'll see. And all right, so I hope this video gives you some different insights or different perspective of what the market health is doing right now. And before I end this session, right, just to share with you that we have this Market Insights Virtual Summit that's coming up on the 10th and 11th of July 2021. There's less than a month away. We have quite a number of speakers over here. All right, we have Michael Covel, the author of the Trend Following book, and we have Tom Basso, the original market wizard, and we have Boris Schlossberg, the FX expert over here, and we have quite a number of other, you know, speakers as well. They're going to give you, you know, very good content and the overall market outlook for this coming weeks and months ahead. So if you're watching this video on YouTube, you will see the link in the description. And if you're watching this video on the Facebook, you should see the link in the first comments as well. So I hope you guys, you know, learn something from this short video regarding the market breadth. All right, so do sign up for this Market Insights Virtual Summit. Okay, so this is totally free, sponsored by IG Asia. So do register for it, and I will see you guys again very soon. Thank you. Bye bye.